Yesterday was quite the roller coaster in the market. We need to take a look at the updated technicals to see what exactly happened yesterday and how that positions us for today. And don't forget that we still have the PPI and CPI to look forward to. Those inflation reports have not landed as of the recording of this video, even though PPI will likely be out by the time you see this video, as I usually release around 8 to 9 o'clock sometime there in the morning. So you may have already seen that by then. So we'll see the effects of what we get from the PPI report, if you will, at least in the pre-market hours and then in the market hours themselves. So we're looking for subdued inflation. Any signs of that, I think, is going to be significant upward pressure on the markets. Tomorrow, start the big bank earnings as well. So keep that in mind as another catalyst outside of the inflation reports that we get. We still want to hear what the big banks have to say about their economic outlook and their guidance going forward from where we're at right now. So we could still most definitely be in bullish territory. We'll pull up the charts and talk about why I say that is. So here's the S&P 500. Down here is the 200-day, and we happen to be above it. That's bull territory. Now, across the top of this, let me take down the technicals for a moment. This pink line and the blue line. Pink is 50-day moving average. Blue is 20-day. Now, we have a bit of a death cross going on. You see that we already had that drop down below. We had that retest and that fall, and then we took a significant bounce yesterday from the bottom, that low price, 575, closing at 581. So about 1% up from the bottom where it opened up to the top where it closed, giving us a little bit of positivity to close out the day for the S&P. Now, we do need to get back up over what you see up here, the 50 and the 20. Getting back up on top of those gives us a lot more upside. And also pay attention to these previous highs that we had as well, as they're going to be very important to us. We want to put in some higher highs to see some continued bullishness. As long as we keep on putting in lower lows and lower highs, we could keep on dropping for the time being. I think the inflation reports and what we hear from the big banks, I think, are the two biggest catalysts that we have currently in the market. So be on the lookout for that. Now, as per the technicals that you saw when I started this video, you can see the head and shoulders pattern. You can see that we broke the neckline, although look where we closed right at it. So if we pass this retest of resistance and then turn it back into support, that means we do not have confirmation of the head and shoulders pattern. So keep that in mind, please, that this neckline down at about 581, which is about where we closed, we need to get back up on top of that in order to have it as support to cancel a head and shoulders pattern. If instead we get rejected and we tumble back down, we could be heading down here according to the head and shoulders pattern with this height that you see here and what you see right here. Now, mind you, I took the average height of these two supports that we have, calling that an area of support, if you will, and then went to about the middle of that, and then went from about the middle there down to the bottom, puts us right at about the 200-day. And you'll see when we get to IWM what that looks like in terms of bouncing for support. So even if it is something that doesn't hold completely, it is something that you can count usually to hold in the near term, that usually get a pretty immediate bounce off a 200-day. So let's move from there into the Qs, because for QQQ, tracking the NASDAQ 100, we are down below the 50 and the 20 like we saw for the S&P. This 503.57 is important because that's our peak back here from July 10th. So we want to look at that. Moving over to here, actually, let me see, 52. Let me make sure I have that, 52. So yeah, we want to drop this down. That was actually the low that we had here that was just above what we had previously. We're going to drop that down to match the other one. There we are. And you can see we peekabooed down below that previous high from July 10th, but then did close back up above it, and getting back up above that is a bullish thing. We want to see that, but once again, just like I said about SPY, we want to get back up on top of these previous highs that you see. We need to put in some higher highs or higher lows. So as of right now, we have lower for both the highs and the lows, and I know that's high, low, low, high, low, high, low, low. Yeah, in any case, as these highs drop lower and as these lows drop lower, that can tell us that we're heading lower for right now. How do we tell when we're turning back around? When the lows start going higher and the highs also start going higher. And when you get the highs coming down and the lows coming up, that's where you get consolidation patterns happening. And then that could be some sideways trading. And then you're looking for a breakout moment, which can also be advantageous if you're set up properly for it. Let's move over into IWM. I talked about the 200-day, which is this orange line down here. I said, watch, if we get down there, that is a good spot for a bounce. So yesterday, that 200-day happened to be at $215 thereabouts, just shy, 6 cents shy of $215. And look where we are. We actually closed it back up above that, about $217 pre-market hours, $218 right now. watch the inflation reports. IWM is going to react probably the most volatilely to if we are over expectation, meaning that we have higher than expected inflation, expect further negative from IWM, the Russell 2000 stocks, the small caps, than what you would get from S&P 500 stocks or NASDAQ 100 stocks, because they're going to be the most sensitive to it. Also, same thing for the outlook from those big banks. Easy monetary policy is going to be absolutely incredible for upside from the Russell 2000 stocks. We could skyrocket from here. If we fall down below that 200-day and let's say higher than expected inflation, we'll say poor economic outlook, tighter monetary policy coming even from the big banks, that's something that's going to be a lot of downward pressure, probably send us down below the 200-day, which I believe could send us up for some really exceptional upside when that narrative changes. So right now we don't have it yet, but that's something to look forward to. So again, what we want for the wild upside for IWM, we want easy monetary policy, we want low inflation, and then we also want low unemployment, which we actually have one of the three so far with low unemployment. As long as the labor market, as long as the wheels don't fall off of it, we're in really good shape there for the Russell 2000 stocks. So let me reset this view because I talked before, potential cup and handle. There's the cup part. Maybe, just possibly, we're getting that handle. We just don't know so far. It could be just the early starts to one. So let me go back down to the daily chart on this, and we can see early formation, early signs, if you will, of a handle coming off of this thing. Not quite all that perfect, but pretty darn good. And getting back up on top of this trend line could be bullish. There's the 20-day right there in blue coming down. This pink one coming across is the 50. So getting up on top of this trend line that you see that's coming up across your screen, making that support is bullish. Making this trend line, getting on top of that as support, bullish. Getting on top the 20, bullish. Getting on top to the 50, giddy up. Now, mind you, we should have some early signs of that based on what I said about inflation, based on what I said about big banks, and based on what I said about employment. That can really be the big signals that would have that tell us what direction we're going for IWM, whether we have further upside coming for us, wildly so, or further downside coming for us, potentially wildly so. So pay attention to those three things. Let's jump over to Bitcoin, because Bitcoin still does not have a confirmed head and shoulders pattern, just like we don't have that confirmation from the S&P yet. It's beautiful what's set up right there, but not quite shortable yet. I do have a hedge position that's out there, and I do have a long position that's a little bit larger out there for Bitcoin. But check out today's price action. Yesterday we touched, once again, I said this was really super strong support, and so far it's proving it. It's off the peaks from 2021. Anybody not using those needs to look farther left. I'm just telling you, maybe you've seen it before, but if they're not talking about those 2021 peaks and including that in their analysis, they're just missing part of the big picture here. So breaking down below that would have been huge, probably a big old sell. We didn't get there yet. Getting rejected off the 50 like we have so far, not great, but the day is still young, my friends. Getting on top that 50 is bullish, and also breaking this previous peak that we have here from this right shoulder is also bullish. That peaked out right at about 100K, 102,760 is where we found ourselves from that peak on that last candle here on this potential right shoulder that we have. Breaking up above that just refutes the head and shoulders pattern. It's done. It's dead. So we want to watch for that. XRP, also big technicals here. This bull pennant that you see and this consolidation pattern that makes the pennant. From the consolidation pattern, you get your first price target of about 317 per XRP. And then if we move that a little bit more, you can see this 445. That is from the flagpole on the bull pennant. We have the breaker above resistance. We have the retest. So right there is your trade entry, and we'll see if it happens to go to the moon from here, my friends. There could be a lot of upside coming for us for XRP. We broke resistance. We got the retest, retested support. It held, and now we'll watch and see. A lot is in the hands of those inflation reports right now and the big bank earnings. Easy monetary policy is going to be absolutely enormous for those banks. I don't know that they would bother mentioning anything about crypto, but if they did and they made some sort of commentary about crypto-friendlier environment through 2025, that could also be a massive catalyst just to watch out for. You might want to consider that in your analyses as well as you do your due diligence and decide what you want to buy and sell. You can absolutely do that. And if you want to see what I'm buying and selling, you can also see that over at the Discord available through the Patreon. That link's down in the description. Go ahead and support the channel and get access to further information beyond what you see here on YouTube. And if you want to learn to do this technical analysis yourself, there's a link by my dear friend Stockmo Academy down in the description. Click on that link for his technical analysis course. That includes the trading strategy that I personally use, the bread recipe trading strategy. Super easy to set up, super easy to follow. You can see when stocks are about to take off to the upside, which could set up scenarios where you could place entries for buying, even though it doesn't tell you to do so. Same thing for selling to the downside of things, or even if you're trading options, put options, call options, you name it. You can get access to that course even cheaper if you use the code word DOCTOR, D-O-C-T-O-R, when you sign up for that Stockmo Academy course. Guys, thank you very much for watching. I really do appreciate it. I am Dr. Stock, Doctor of Education. Remember, my friends, that learning is earning. We'll see you next video.